Types of overhead rates. 1. Normal rate. Normal overhead rate equals actual amount of overheads divided by actual base. 2. Predetermined overhead rate. Predetermined rate equals budgeted amount of overhead divided by budgeted base. 3. Blanket overhead rate. Blanket rate equals total overhead for the factory divided by total number of units of base for the factory. 4. Departmental overhead rate. Equals overhead of department or cost center divided by corresponding department or cost center base. Treatment of underabsorbed and overabsorbed overheads in cost accounting. Production overheads are to be determined in advance as follows for fixing selling price, quote tender price, and to formulate budgets, etc. Predetermined overhead rate equals estimated or normal overhead for the period divided budgeted number of units during the period. The actual overhead rate will rarely coincide with the predetermined overhead rate, due to variation in predetermined overhead rate and actual overhead rate. Treatment of under or overabsorbed overhead is depicted by following diagram. Is there any under or overabsorption of overheads? If yes, check to see amount of under or overabsorption is small or due to wrong estimation and abnormal reasons. If yes, charge to profit and loss account. If no, calculate supplementary rate and charge to cost of sales account, finished goods account, and WIP account. Accounting and control of administrative overheads. Accounting of administrative overheads. 1. Apportioning administrative overheads between production and sales departments. 2. Charging to profit and loss account. 3. Treating administrative overheads as a separate addition to cost of production/sales. Control of administrative overheads. 1. Classification and analysis of overheads by administrative departments according to their functions, and a comparison with the accomplished results. 2. Control through budgets. 3. Control through standard. Disadvantages of apportioning administrative overheads between production and sales departments. It is difficult to find suitable bases of administrative overhead apportionment over production and sales departments. Lot of clerical work is involved in apportioning overheads. It is not justified to apportion total administrative overheads only over production and sales departments when other equally important department like finance is also there. Disadvantages of charging to profit and loss account. Cost of products is understated as administrative overheads are not charged to costs. The exclusion of administrative overheads from cost of products is against sound accounting principle. Accounting and control of selling and distribution overheads. 1. Accounting of selling and distribution overheads. The collection and accumulation of each expense is made by means of appropriate standing order numbers in the usual way. Where it is decided to apportion a part of the administrative overhead to the selling division, the same should also be collected through appropriate standing order numbers. The bases usually adopted are: A. Sales value of goods. B. Cost of goods sold. C. Gross profit on sales, and D. Number of orders or units sold. 2. Control of selling and distribution overheads. The collection and accumulation of each expense is made by means of appropriate standing order numbers in the usual way. Where it is decided to apportion a part of the administrative overhead to the selling division, the same should also be collected through appropriate standing order numbers. Methods. A. Comparison with past performance. B. Budgetary control. C. Standard costing. Concepts related to capacity. 1. Installed/rated capacity. It refers to the maximum capacity of producing goods or providing services. Installed capacity is determined either on the basis of technical specification or through a technical evaluation. It is also known as theoretical capacity and could not be achieved in normal operating circumstances. 2. Practical capacity. It is defined as actually utilized capacity of a plant. It is also known as operating capacity. This capacity takes into account loss of time due to repairs, maintenance, minor breakdown, idle time, setup time, normal delays, Sundays and holidays, stock taking, etc. Generally, practical capacity is taken between 80 to 90% of the rated capacity. It is also used as a base for determining overhead rates. Practical capacity is also called net capacity or available capacity. 3. Normal capacity. Normal capacity is the volume of production or services achieved or achievable on an average over a period under normal circumstances, taking into account the reduction in capacity resulting from planned maintenance. 4. Actual capacity. It is the capacity actually achieved during a given period. It is presented as a percentage of installed capacity. V. Idle capacity. It is that part of the capacity of a plant, machine, or equipment which cannot be effectively utilized in production. A. Normal idle capacity. It is the difference between installed capacity and normal capacity. B. Abnormal idle capacity. It is the difference between normal capacity and actual capacity utilization, where the actual capacity is lower than the normal capacity. Treatment of certain items in costing. 1. Interest and financing charges. Examples: interest on borrowings, cash discount allowed customers, etc. Interest and financing charges shall be presented in the cost statement as a separate item of cost of sales. 2. Depreciation. Depreciation is the diminution in the intrinsic value of an asset due to use and/or the lapse of time. It shall be traced to the cost object to the extent economically feasible. Where it is not directly traceable, it should be assigned using either or two principles, i.e., I, cause and effect, and 2, benefit received. 3. Packing expenses. Cost of primary packing necessary for protecting the product or for convenient handling should become a part of the production cost. The cost of packing to facilitate the transportation of the product from the factory to the customer should become a part of the distribution cost. If the cost of special packing is at the request of the customer, the same should be charged to the specific work order or the job. The cost of fancy packing necessary to attract customers is an advertising expenditure. Hence, it is to be treated as a selling overhead. 4. Fringe benefits. These are the additional payments or facilities provided to the workers apart from their salary and direct cost allowances. If the amount of fringe benefit is considerably large, it may be recovered as direct charge by means of a supplementary wage or labor rate, otherwise these may be collected as part of production overheads. V. Expenses on removal and re-erection of machines. Such expenses may be incurred due to factors like change in the method of production, an addition or alteration in the factory building, change in the flow of production, etc. All such expenses are treated as production overheads. When amount of such expenses is large, it may be spread over a period of time. If such expenses are incurred due to faulty planning or some other abnormal factor, then they may be charged to costing profit and loss account. 6. Bad debts. One view is that bad debts should be excluded from cost. According to this view, bad debts are financial losses and therefore, they should not be included in the cost of a particular job or product. According to another view, it should form part of selling and distribution overheads, especially when they arise in the normal course of trading. Therefore, bad debts should be treated in cost accounting in the same way as any other selling and distribution cost. However, extraordinarily large bad debts should not be included in cost accounts. 7. Training expenses. Training expenses of factory workers are treated as part of the cost of production. The training expenses of office, sales or distribution workers should be treated as office, sales or distribution overhead as the case may be. These expenses can be spread over various departments of the concern on the basis of the number of workers on roll. Training expenses would be abnormally high in the case of high labor turnover. Such expenses should be excluded from costs and charged to the costing profit and loss account. 8. Canteen expenses. The subsidy provided or expenses borne by the firm in running the canteen should be regarded as a production overhead. If the canteen is meant only for factory workers, therefore this expenses should be apportioned on the basis of the number of workers employed in each department. If office workers also take advantage of the canteen facility, a suitable share of the expenses should be treated as office overhead. 9. Carriage and cartage expenses. It includes the expenses incurred on the movement, inward and outwards, and transportation of materials and goods. Transportation expenses related to direct material may be included in the cost of direct material, and those relating to indirect material, stores, may be treated as factory overheads. Expenses related to the transportation of finished goods may be treated as distribution overhead. X. Expenses for welfare activities. All expenses incurred on the welfare activities of employees in a company are part of general overheads. Such expenses should be apportioned between factory, office, selling and distribution overheads on the basis of number of persons involved. 11. Night shift allowance. Workers in the factories, which operate during nighttime, are paid some extra amount known as night shift allowance. This extra amount is generally incurred due to the general pressure of work beyond normal capacity level and is treated as production overhead and recovered as such. If this allowance is treated as part of direct wages, the job/production carried at night will be costlier than job/production performed during the day. However, if additional expenditure on night shift is incurred to meet some specific customer order, such expenditure may be charged directly to the order concerned. If night shifts are run due to abnormal circumstances, the additional expenditure should be charged to the costing profit and loss account. 12. Research and development expenses. The terminology defines research expenses as the expenses of searching for new or improved products, new application of materials, or new or improved methods. Similarly, development expenses are defined as the expenses of the process which begins with the implementation of the decision to produce a new or improved product. Thank you.